All right, hello everyone. Happy Tuesday. In today's video, we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, the VIX. We have to take a look at how the large tech stocks that were leading this market, how they're now responding. And then we also have to take a look at the way that the candles and the price action is being put out in front of us for the main leaders as well as the main indices. All right, so without further ado, let's get started with the video. All right, so first of all, the Russell is starting to break out of its falling wedge pattern. So falling wedges are extremely bullish patterns. And now we just need to see if it can continue. We had a bit of a break to the downside, which caused many people to become bearish. And then this was a fake out. 170 held on the IWM and it ended up bouncing. So our calls on the IWM also just recovered greatly today, which was amazing. So yeah, so now the IWM is bouncing. It helped keep the SPY up earlier in the morning as it was the leader today. So the Russell was up 1.13%, the NASDAQ was only up 0.55%, and then the SPY was up 0.52%. So now what's interesting is, so this is a chart of the NASDAQ, and I want to show you guys the moving averages. So we can see that the NASDAQ closed above the 50 moving average here. And it closed above the 618% fib. So this is clearly, we had a huge move in the past few days on the NASDAQ. You could see how far away the 200 SMA is. But ideally, right, this large wick to the upside, that's not really what we want to see. So we see this wick here on the NASDAQ as well as on the SPY. And we don't want to see a wick like this, honestly. So obviously on the, so this is a chart of the SPY. We could see that the 50 SMA is around 440, right? I want to show you guys a chart of the SPX afterward as well. It's going to really put things together. But this 50 SMA is still a ways to go. Obviously, we're not as strong relative to the NASDAQ. We just broke above the 38.2% fib on the SPY. But this upper wick, it's not really what we want to see. Tomorrow morning, we have news coming out. We have Fed minutes coming out at 2 p.m. And then Thursday morning, we have CPI data coming out. So there's a lot of news potential that could cause the market to drop a bit. And that's completely normal. We had a huge move to the upside. So that's my thought process. We could fill this candle up a bit. You know, we could fill it up a bit, right? But this is generally not like the most bullish sort of situation on both the NASDAQ and the SPY. And I'm going to explain, we're going to also look at the large tech stocks as well to put everything together. But I don't really like this setup on the SPY. And it only makes sense. 437 was a major level of resistance. We could come back to 433, 432. That's completely fine. We had a 15, we closed. So we had a $17 move in the past 3 days on the SPY. So obviously, a bit of a pullback, even 5 or 6 points, is completely normal. So yeah, that's essentially what my thought process is. And so now I want to show you guys the chart of the SPX. So the SPX, we were looking at this important trend line from back in January 2009, held perfectly. And all of these major trend lines from years and years ago held, and then we just continued up. So now what's interesting is that the SPX has a gap to fill at this low here from September 20th. And that low almost coincides pretty well with, it's getting close to the 50 SMA. So that is pretty interesting on the SPX here. So we're going to have to see if, the strength can continue. But these levels of supports are completely justifiable levels of supports that we could continue holding and then bouncing up off of. But you can't be bullish up here. You can't start adding longs. Today was not a day to start going long at all. Today, if anything, if you want to go swing or anything, if you want to do something, swing short. Because there's no point of trying to go long here after a huge bullish move. You can't really do that. And another thing that you guys have to start getting into the habit of is we have to start looking at how the large tech stocks that were the drivers of the market, how they do when we have these big moves. So let's just take a look at Google, right? So Google was a really, really big name. It was one of the biggest reasons why we had a move to the upside to begin with, right? Does this look like a bullish setup on Google? No. So I would be surprised if Google ends up making another high tomorrow, to be honest. This is a sort of setup on Google where we get a bit of a pullback. We can take a look at Nvidia. Nvidia, the wick, similar situation as the SPY and the NASDAQ. We came to a level of resistance. We wicked low. So yeah, we closed green on Nvidia, but this wick is an issue. AMD looks really strong though. But now Meta, that's also pretty interesting. So Meta is starting to get really overextended to the upside, and we have major resistance at 326. We hit almost 326 today, but this is not the point in time when you want to start going long on Meta. So if it's not a good time to go long on Meta, obviously, you know, even if we do get another push upwards, these are not really good bullish setups that we should be longing. So I'm assuming, you know, if we do get a huge gap up or something, right? I don't think that's going to happen. But if we do, then it would make more sense to be a bit bearish, especially at this 326 level. So if Meta and Google are both looking a bit bearish, then, you know, it's going to be tough to be completely bullish on the overall market continuously. And yeah, that's really my thought process when you look at the large tech stocks so far. Obviously, we got some love out of Amazon. I was showing how Amazon was one of the biggest losers. There should be love in Amazon soon. We got that. Tesla, also the upper wick, not looking great. And then Netflix, not helping anyone either. Netflix doing what Netflix does. Just garbage. And yeah, Netflix doing what Netflix does, guys. But essentially, the large tech stocks, the biggest drivers. We also have to take a look at Apple. Apple also, this is not a bullish candle. So the biggest drivers of the market, they're not showing extremely bullish patterns. The only we also have to look at Microsoft. Microsoft also just adds to the equation. So we have Microsoft, Google, and Meta not really looking that bullish. And you know, these are not amazing bullish opportunities. We need a bit more of a pullback on these names. We had a huge move to the upside. Now is not the time to start going long, in my opinion. And that is sort of going to be shown more when we look at the dollar and the yields. All right. So now let's look at the dollar. So look, guys, this already had a really big move to the downside. And now we're at a major level of support here. This lower wick, which was a point where we had a big skyrocket to the upside. So yeah, you know, on the dollar, we could break lower. And it's important to look at the dollar because it has an inverse relationship to the market. So if the dollar is rising, that's generally very bearish for the market. And are you going to start going short on the dollar here? This doesn't make any sense to start being bearish on the dollar. Does that make sense? No, it doesn't. This is a level of support. We have another level of support right here. If you do go short, this is your target. So are you really going to... This doesn't make any sense. So in my opinion, it makes more sense to just wait or start to buy the dips on another rip downwards. And then, you know, as we bounce on the dollar, then I think, you know, that should cause the overall market to also drop because they have an inverse relationship. And now we could take a look at the yields. The yields also have an inverse relationship to the market. So if the yields are rising, then that means that the overall market should be falling. So this actually does not really look amazing. Obviously, we had a day off on yesterday for the bond market, so this doesn't look that great. But pragmatically, we held this level of support. Once again, we held support, and this doesn't look that great, to be honest. So we could be falling lower on the yields, and that could cause the market to rise some more. We have support. We have a major support a bit lower here, and then we have some more support on the 10-year yield a little bit lower. We have some more room to go pragmatically on the yields. So we could take a look at the 5-year. The 5-year, similar situation. It's getting close to a major level of support. We are close to this wick where we had this huge move to the upside, similar on the dollar. So we're basically at support on the 5-year. Let's take a look at the 20. This doesn't look that bullish, honestly. This doesn't look that bullish. And then the 30-year also doesn't look that bullish. So the yields look terrible, actually. So let's see if the yields can start showing some real weakness, and then let's see how that permeates into the market. If the yields continue to show weakness like this, then the market is going to continue rising. And the VIX is almost down below $17. And the VIX is important to look at because it has an inverse relationship to the market as well. So if the VIX is rising, then the market should be falling. Okay, similar. Now, this also is getting to a point where you don't want to start shorting it. But the fact that we're below $17, the market tends to be really bullish below $17 on the VIX. So it's going to be pretty interesting. This does look bearish, you know, obviously. And it's just really interesting to see how much more steam there is to the upside. We have a lot of news going on for the market. There's a lot that's about to happen in the next 2 days. There's a lot that we could still see to the upside. We could still see 440 on the SPY. We saw 437. We almost saw 438 today, right? So we could see 440. So basically, this week, we could get a bit of a pullback. That would be completely normal, right? We could get a bit of a pullback into the end of the week. Why not, right? And then create some sort of it would have to probably be a falling wedge, maybe. And then, you know, that falling wedge would be probably get a bounce off of 430 sometime next week. That would probably be what would end up happening, I think. So let's just see if that plays out. And yeah, it would only make sense because we see this very important trend line on the SPY. And you know, so just look at these levels. So on Monday, trend line is going to be at 428.50. On Tuesday, the trend line is going to be almost at 429. And then so basically next week it's going to be hugging 429. So we would need to get some sort of a really bullish pattern built up into this early next week where we get a continued rip to the upside. And I think that's what's going to end up happening all throughout. You know, with CPI data, I think it would be really beneficial for the market because we had a huge move to the upside. It would be beneficial for just the mechanics of the market if CPI data was a bit bearish, and then, you know, it would cause a bit of a sell-off in equities to get cheaper prices, and then maybe a continued rip to the upside. So let's just see. But overall, I would say that buying this dip here was a success, and, you know, just continuing to buy the dip as we fell was a success. So now is not the time to start going short, but it's also not the time to start going long. So I hope this makes sense, and I hope you guys enjoyed today's video. Hope I did a good job putting everything together. And yeah, guys, love you guys. Make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys bright and early tomorrow morning. Thank you.